Hey, Quants, we're going to do a little bit of analysis on BTC this morning, and then I'm getting back to doing some Pine script coding. So I'll have some, as I mentioned before, I'll have some other videos out in the future where I'll be doing some different indicators and stuff. Right now I'm working on some updates to the skeleton key. So if you're a member of Quant Prime AI, then you will be getting those updates here within the next few weeks. Hopefully a little bit sooner than a few weeks. I think I do have a fair amount of updates that I've already made, and I'm in the middle of just finishing a few more updates. I want to just get those tested. There's a few more implementation things, and so for those who are familiar with that, there'll be some more ways to take profits and configure risk-reward type of entries for backtesting and then automation if you want to do that kind of thing. So into the charts, I wanted to look at some of the seasonality charts that are provided. These recently became available in TradingView, and I haven't really looked at this too much, but I do see a lot of other individuals using other charting software or other websites that already have this stuff charted out and using it. So in the context of where we are today and not knowing if price is going up or down, sometimes it might be useful to take a look and see how things have panned out historically. This is not going to be super, we're only going as far, you could go as far back as the full history, but I would just to illustrate that if I were to take this chart all the way back to the full history, it's really hard to read some of these. You can still hover over and kind of see where things are on this historical chart. You could also switch over to the table view, which I will comment on a little bit later if you want to look at the table view. But from this particular view, what I want to look at is I want to look at the line chart. And so just simply what I would like to do, and this isn't really going to give me anything actionable that I would utilize, but it's similar to looking at fractals in a sense that I just want to see how some of these cycles are performed in the past. And so we know that in 2022 we were in a bear market, and this market was typically trending down or had already trended down and then was maintaining flat towards the bottom. And so you can see that on the very low line here. In that context, we've been doing better than that. We are positive for the year. Currently it's showing we're 8.88% positive for the year. And what I was expecting, and I think what a lot of other people were expecting, is if the 4-year cycle was going to hold, is that we would see some kind of a blow off top or something similar to that in Q4. It looks like since the high of 126, we haven't seen a lot of upside since then, but that has also been the case that we've seen some downside price action previously in some of these other months. So let's see, 2024, it looks like we were moving downwards in the beginning of November, and then we still kind of rallied out of that. Again, this is one data point for 2024. It looks like we're mostly flat for 2021. While I was looking at this, something that I hadn't really paid too much attention to, but I was around at that time, and consequently, I ended up holding some of my bags throughout this portion, was that in 2021, we topped out here on the 7th of November. And I do remember that happening. What I do not exactly recall is this decline through the majority of November and December. Personally, I ended up selling most of my positions in 2022 around February. And so because I was utilizing a trend following strategy at that time, so basically the master strategy, that's kind of when I was first learning about that one. And I started leveraging that to help manage my positions. That tended to be a lagging indicator. And also by the time that I had found it and was able to implement a strategy and validate that it was a viable strategy, and I mentioned before in the past that that was the first strategy that I'd ever found that I coded up and found that it was actually a profitable strategy, even though there was not a lot of entries in that for that long-term trend following strategy like that. I still was able to utilize that to preserve a fair amount of my capital at that point in time. So with that said, what I want to note here is, in the most recent year that we've had, aligning with the 4-year cycle, we did top quite early in November. And so I've heard a lot of people, I think, working out the math exactly to like 1,064 days or 1,061 days, and noting that we've already moved past that. So if we were to hit a new all-time high, we'd actually be in a further extended cycle than we've ever experienced before, which I'm not going to say, I don't know. I don't know if that would happen or not. Either way, if you're just looking at the 4-year cycle, it is quite possible that we've already topped, and as we've started to trend down here, we just continued trending down. So the counter to that is there has been some downward movements in some of these cycles, and if you include some of the other data here, I don't want to go too far back, because if I do that, 2018 was another bear year, so that's going to be down here where 2022 was. I don't want to go too far back, because if I go too far back, then we end up with this kind of being totally off scale, and it's just really hard to look at this particular visualization that way. So, but the point that I wanted to make is that it's not entirely possible that it's not impossible that we don't trend down for the first part here, of course, and then start trending up. And that's kind of one of the key things that I'm looking for from price action perspective, is to see if we do start trending up. If we don't start doing that, then I would start leaning more on the side of what some others have called out in terms of like either a prolonged I don't know if it'll be accumulation or distribution phase, where essentially we're just seeing flat market price or potentially downward market price, and just expecting that the cycle has in fact completed, and we will likely see another cycle coming up, which could be the left translated cycle if you're following Bob Lucas, or if you've studied or been familiar with 4-year cycles. The concept there is that within every 4-year cycle, you will also have a larger 16-year cycle. And so in that context, you'll have 3 bullish cycles, which would be right translated cycles, and then you'd have essentially a corrective cycle, which would be a left translated cycle. And so I am interested to see, and I'm curious to see how that plays out, because let's assume at this point, if we have already topped out, then there's the potential that we just continue to trend down, and maybe we don't go as low as we have historically gone. Maybe we don't lose 80% because we're getting diminishing gains. Maybe we also have diminishing returns and we only lose 50%. Or 40%, and I kind of showed some of the fibs for that, where even that would be quite significantly different versus the maybe 10% change, which would probably put us at like a 65% loss overall. But in any case, maybe we only see a 40%, 50% loss, and then at that point we see another kind of bull market phase, which could then equate to the left side, the left translated cycle, where potentially we do actually see another all-time high or close to an all-time high in 2026 or potentially 2027, and then another top out, and then the bottom of the price just falls out at that point, which then would make a completion of a left translated cycle. And then if that were to hold, then we'd probably expect another 3-ish years of bearish price action before the price recovered, and then we would see another resumption of a large macro 16-year cycle occur again. So anyways, just playing with these charts, mulling over some ideas, and also looking forward and thinking about how that might play into the 16-year cycle or the 4-year cycles, the accumulation of 4-year cycles into a 16-year cycle, and potentially a left translated cycle. So that same seasonality chart is actually, you can put it as an indicator on your chart here, and so I've done that here. That's why I didn't use the table view over there. I wanted to use the table view here. So the things to point out here is that this is going to point out the average returns, and right now it goes back to 2015. But you can go into the chart and the inputs, and you can actually select farther back. So in a table view, I do like this view. The line chart is very easy to just get like a very cursory overview of price action and kind of do some of that I lost the word that I was looking for, the correlation to other patterns. And so when I remember that word, I'm going to come back to that. And so it's easy to do that kind of analysis just looking at the chart, just cursory overview. But coming in here and looking at the table view, we can see a little bit more details on the individual months and what could be considered important here is the average. One thing that would be nice here is having a median, I think, as well, which they don't have. But consequently, what we have for an average in October was expected to be 19. They had the price. This is 1906 after this month has closed. Before this month had closed, it closed at a 3.95% loss. If it would have closed before that, when we were in the month, it actually had projected a 21.36% gain. That was simply based off of the averages. So that doesn't really become anything actionable, in my opinion, because you can't simply just like say, oh, these are the averages, so I'm just going to assume the average is going to occur. In that case, you would be weighted towards being bullish likely all the time and not taking into account any bullish or bearish factors or even the current price action potentially if you're doing this over the course of a number of years, right? So in any case, what I wanted to mention about that is this is calling for a 9.34% return on this month, which I don't think is going to happen, but it's not impossible. And if we look over at the data window here, so one thing we could see for that is if it were to go 9.34%, the expected price for the current month would be 119,000, which would be nice. If we get back up there, then we're starting to get to where I would be looking for another potential top, which would be at this resistance line up at the top here. So, all right, let's go ahead and hide that stuff and go back to the master strategy. Well, before we go there, let's also call out the moons. So we did have a bull moon yesterday, and so far, that seems to have been playing out, but that doesn't always play out, of course. So we'll see if this continues to drive further price action up. And even if it is bullish action, we have no clue how far that price action will go. If you recall, one of the things that I mentioned is it's not uncommon once the trend starts to shift from bullish to bearish, which, as I mentioned with the chart down here, we are already sitting at a 75% bullish versus 25% bullish, so more bearish on on the master trend strategy. Once we start to shift that side to bearish, and we lose the 200 support, it's not uncommon for the price to track down, which it has already done, to come back up, tag those 200s as a retest, and then bomb out. And so that is one of the things that I'm waiting to see for confirmation in terms of going full bearish in the current market. So this bull moon could give us that, could be one of the things that is, well, the bull moon's not going to do anything, right? But what we do is we look at it as a way to potentially assume or predict, and assume that we're going to get upper side price action. So if we get upwards price momentum here, or price action here, I would be looking to see how it plays against those 200s. I did mention the potential for bullish divergence. That has been invalidated on the MACD now that this MACD value is now lower. Oftentimes you can get W patterns, but I don't particularly like those. If it's very close, some people would still consider those valid divergences. I don't personally do that. So divergence has been invalidated on the MACD. It is still possible to get divergence on the stochastics here. I personally really like it when I get confluence on both of these, but I have tested both cases and I have found that it is still fairly profitable to play off of one or the other, even if you don't have the divergence presence. So this is still good, a likely possibility, well, I say likely, it's not likely yet because it's not confirmed. So once we have confirmation of this being bullish divergence, which would require price to continue up, which might be, which the bull moon is predicting or suggesting might happen. Once we have confirmation of that, then there is a likelihood that we'll set in for some bullish divergence. And again, the main thing I'd be looking for here is a retest of the 200s to see how things play against the 200s. And if they totally lose, if that holds as resistance, then I would expect that we're going to, not to Valhalla, we're going to be going back down. And I would then be expecting that the 4-year cycle is probably over and it's time to cash in your chips and lick your wounds if you have any wounds, or just walk away with your winnings and hang on to your winnings, protect some of that capital, and then see how things, and then just start preparing for the next cycle, or go short if that's your preference. I did mention I tend to be long biased, and so I don't do a whole lot of shorting, but that is something that I will likely be playing with a little bit. So that is it for BTC and all my current thoughts on the market. I hope everyone is doing well, and we will see you in the next one. Peace out, quants.